Let's talk about credit reports and credit scores. Imagine a diary that records every loan you've taken, every bill you've paid, and even when lenders check your finances. That is your credit report. It's a detailed history of your financial behavior used by banks, microfinance banks, money lending companies, and even your employer to decide if they can trust you. That is what we call credit reports. Now let's talk about credit score. Your credit score is your financial GPA. Now imagine your financial history graded like exam. That is your credit score, and it can be between 300 to 850. The higher your score, the more lenders will trust you, and the lower the interest rate and the bigger loans you will have access to. Now let's break down the credit score. If you have credit score as low as 300 to 550, that's a very poor credit score. It simply means that lenders see you as high risk. That is, you have defaulted, you have late payments, and you have too much debt to pay. If your credit score is between 551 to 650, which can be called average, it means that sometimes you have a delay in payments. You have mixed history, some on-time payments, but a few mistakes. It means that you have history that you didn't pay on time. This can affect loan approval as well. Even with 650, it can affect loan approval, and they can give you higher interest. They may even require that you bring collateral if you're dealing with banks. If your credit score is between 650 and 750, that means your credit score is very good and you pay on time, and you definitely have low credit utilization. Definitely, if you are approaching bank, they will give you low interest rates, and you can qualify for several things like mortgage, car loan, and many other loan facilities. And if your credit score is between 751 and 850, which is excellent, it means you have very strong credit report with no late payments, you pay on time. Definitely, you have access to higher amounts, which simply means that they know that you are paying on time. Banks can easily approve your loan. Now, what if you don't have any credit score at all? It means you've never borrowed before, you don't have any history of borrowing, you've never paid any bills before, and things like that. And lender can't predict anything about you. They don't know you. They don't know what you can do. Sometimes you may face rejection, but for the most part, you are still in good standing. So it is better for you to build your credit score. And if you don't need it, just leave it. Credit score only applicable to banks, microfinance, and money lenders. In summary, credit score is about getting access to loan facilities. Now let's put everything together. Your credit report is the raw data, and your credit score is like your overall GPA. In Nigeria, there are 3 main credit bureaus that track your reports. We have CRC Credit Bureau, First Central, and Credit Registry. By law, you can check your reports once a month or once a year for free. Now, how do you build your credit score? If you want to build your credit score, make sure you pay your bill early, keep your debt very, very low, and stop borrowing from loan apps. Avoid loan apps completely because of high interest rates, which will eventually ruin your credit reports and score. Loan apps are set up to ruin you financially because the minimum interest rate is between 40% to 60% per month. If you must borrow, only stick with banks and reputable microfinance banks. Those ones are well regulated by the CBN, and they cannot charge above certain threshold. To check your credit score for free, visit loansharkreview.com/checkcreditscore. Follow us for more info.